So here I am today with Terry Ryder of Hotspotting, Australia's leading independent property researcher. Thank you for being with us today, Terry. There's a few questions that I'd like to ask you, and here in our local Cherrybrook community, there seems to be there's obviously conflicting media reports going around with what's happening. So it'd be great to get a professional's view and feedback on what's happening and what you can see happening as a result. So thank you for being with us, Terry.
No worries, Angelo. It's always a pleasure to have a chat to you and to find out what's going on in your part of paradise, but also just to talk generally about real estate, my favourite topic.
Yeah. Look, as is mine. So we'll look. I might start off, if we will, just in the. So at the moment, there's conflicting reports. People are in two minds as to what's the property market doing. And just to, if I could give an example here, on my Google Alerts, I get updates on what's happening in the Sydney property market. And I'll give you a couple of the headlines here. ABC News are telling us that property prices rose by 4.7% across Australia's 8 capital cities in the last quarter. Nine News are telling us that Aussie property prices record biggest 12-month price jump in history. We've now got Daily Telegraph telling us the New South Wales property market on the decline, says CoreLogic data. Just on that, Sydney's housing boom appears to have popped, with some suburbs' median house values falling for the first time in almost 18 months. And then we've got the Sydney Morning Herald, who are telling us the property prices are heading for break-even point as clearance rates fall. So who should we believe and why?
Look, Angelo, I think there's a very good possibility we shouldn't believe any of those people.
Yep.
I often say to people, if you want to succeed with real estate investment, the first thing you should do is stop reading newspapers, stop tuning into mainstream media, because you're just going to fill your heads with misinformation and negativity. I think it's important to understand the motivation of the people who publish these things and write these articles and these headlines. Is that, generally speaking, I don't think their motivation is to be helpful to consumers. They're not trying to help us. They're not trying to inform us. They're trying to probably to startle us and alarm us and induce us to click on a headline, because it's all about clickbait these days.
Yeah, true.
And
yep.
The click-through rate. And I think sometimes people are willing to say whatever to achieve that goal. And the people who feed media with press releases on a daily basis, their motivation is to achieve a publicity. And they know that the shortcut to achieving free publicity through media is to say something sensationally negative. And so we get a lot of that being foisted on us as information and as news, when really it's not. It's propaganda more than fact. And so it becomes very, very confusing for the average consumer trying to make sense of it, trying to understand what's really going on. And particularly when you can, on the same day, read, as you've just given examples of, 3 or 4 headlines, which tend to tell us completely different messages about what's going on. And often it's a case of lies, damn lies, and statistics. If you've got a particular viewpoint that you want to put forward for whatever reason, you can usually find a set of statistics to support you. So you can go into the latest stats from CoreLogic and mount an argument that markets are starting to slow down and prices may fall in Australia. But if you look at it with a different set of eyes, you can see that there are many markets across Australia which still have boom time growth happening. Brisbane, Adelaide, most of the regional markets, Hobart, Canberra. So it depends on how you look at the data and what your motivation is as to what message you can take from it. Also, I think one of the very big problems is that media likes to draw startling conclusions on very thin evidence. And one of the mistakes they make is they draw big conclusions based on 1 month's data. So if the latest figures come out from CoreLogic and the rate of growth across Australia is less than the previous month, the conclusion will be the property boom is slowing down. Now, I would point out that in the last 12 months, media has declared the end of this property boom 5 times. The first time was in February last year, when 1 month set of statistics from CoreLogic suggested the market was slowing down. So they declared the boom was over 12 months ago, only to be contradicted by the next month's set of figures, which shows the rate of growth rose again. But then again, around April and May, they again declared that the boom was over based on 1 month's set of figures. And the message here is that you cannot place great significance on 1 month's data, because you've got to look at the longer term trends, because the data month to month is up and down. And that's what we're seeing at the moment. And some media are jumping on and saying, oh, the boom's over. Oxford clearance rates fell last weekend. You know, that's pretty thin evidence to be making a big conclusion such as the boom is over. I believe that it's very much alive, and we're going to be seeing prices growing in markets throughout Australia, including across Sydney, throughout 2022 and beyond. We're in a cycle that has a lot of momentum underneath it. There are a lot of reasons why real estate is rising at the moment. Economists tend to say it's all about low interest rates, and I think that's very shallow analysis. I've got a list of reasons why we're in this boom, and there's 16 dot points on that list. So it's quite substantial. There are lots of things driving it. And we've got forces about to be unleashed that we haven't felt yet, like the opening of international borders and the bringing back of international overseas migrants and overseas students, which have been absent from the market for a couple of years in places like Sydney. And Sydney's managed to produce all this wonderful growth, despite the fact that it hasn't had any impetus from overseas migrants, which are usually a big part of the momentum. So I think there's a lot of false analysis happening at the moment, and people need to take a cold shower and look at some factual data.
Yeah, look, just adding to that, if I may, you know, you talk of February last year where they were recording. Was that right? You were saying February last year they recorded. Yeah, it's interesting because when I do the monthly video updates here in Cherrybrook and I track the data, it was very different to what was being reported across the board. So Cherrybrook, we recorded 17 registered home sales for the month of February 2021, which it going from January where there were only 2 or 3, right? And the median price had, you know, it had skyrocketed when you're looking, and absolutely, you can't get accurate data from 3 sales. Absolutely, you've got to look at the sales volumes. You've taught me that, and I understand. But you could see the trend was definitely proving otherwise. And in saying that, you can't look month by month because it could be a very different story going into March, and it's very easy to get caught up in month by month figures. Yeah. So I guess as a baseline, what do you look at, and what would you recommend, you know, those that are looking to sell, looking at what's happening at the moment, and those that are looking to buy? What would your advice be to those people? Because obviously you're going to have, now we've got the Russia-Ukraine conflict and sanctions. You know, how will that impact? Maybe let's just start with that question first. How do you think that'll impact us?
Look, I don't see any direct impacts for Australian real estate at all. I mean, there was one, you know, I've been referring to some of the startling media, which is motivated by reasons other than to inform us. And one example of that recently was a headline, I think, in the Financial Review that suggested, based on a press release from a high-profile commentator, that Australian property prices would fall 15% because of the war in Ukraine. And I just thought that was about as ludicrous a headline and an article as I've ever read. I don't see any direct impact from that. We're obviously going to be paying more for our petrol prices, and there'll be, you know, repercussions in various ways felt in the global economy from that conflict. But in terms of the Australian real estate market, I don't see anything, certainly nothing negative. If anything, it could be a positive, because what we have learned through many examples over, say, the last 20 years, that when there is major uncertainty in the country or in the world, such as when we had the global financial crisis and other major events that have happened like COVID-19, that people actually retreat to the safety and solidity of real estate. I mean, at the start of COVID, all the bank economists were forecasting our prices were going to collapse, but they did the opposite. Out of the ashes of the pandemic has come a property boom such as many of us have never seen. And economists are scratching their head trying to explain that, because their logic says prices would have fallen. But well, actual fact, my logic says, no, I'm not surprised that they rose, because in times of uncertainty, people look to what they know is dependable and safe, that they can rely on, and real estate fits that in the psyche of most Australians. So we have seen a property boom arising out of the midst of chaos. So if there's going to be any impact at all from that war in Europe that's currently raging, it may well be actually a positive for real estate in Australia.
Yeah, so basically what you're saying there is people look for things such as tangible assets being real estate where they can secure, and there's nothing more secure than a family home, right? And I think looking back on it now with all the government stimulus packages, people couldn't go out on holidays, they couldn't spend, they've got all this money, couldn't do anything with it. So housing seemed to be, would that sort of be a fair assessment? Would that have played some part in that?
Yeah, I think absolutely. And we've seen it happen many times, not just recently. We saw it happen in the wake of the global financial crisis, more than 10 years ago. And we had a similar reaction where at that time, there were people forecasting our prices were going to drop 30, 40%. That knee-jerk reaction we always get when there's a problem in the country or the world. But what actually happened in the next couple of years, property prices rose quite solidly in the wake of the GFC, and it was a similar syndrome. So people know that they can trust real estate to perform. It's not like the share market where we can have these spectacular collapses in one day. Real estate doesn't do that. It's a slow-moving animal. It's a very solid and secure type of creature, and people feel they can depend on it.
Yeah, no, that's yeah, thanks for that. And I think, because I do see those reports going to drop 30 to 40%, and I'm not qualified in this field, but I'm just looking at it from a common sense perspective. It doesn't equate, right? And the reason I say that is I look at the suburb that I operate here, Cherrybrook, right? There's no real mortgage stress in this suburb. So why would a person sell their, as we were saying, the tangible asset to sell for 30 to 40? They just stay put. You wouldn't sell. So for a crash of that significance to happen, that's basically saying that the whole market's going to crash, right? So yeah, I've never understood that logic.
No, well, there is no logic behind it, Angelo. That's why you can't understand it, because it's not logical. I mean, in the history of Australian real estate, we've never had a crash remotely of those proportions. We've had periods when, as an average across the country, prices have fallen, but it's been very, very moderate. We usually, at the end of a boom, we have what we might call a correction.
Yes.
And it might be 3 or 4 or 5%, and then markets sort of get back on a growth path gradually. But we've never in this country had a collapse like 30, 40, 50%, such as some people have predicted, usually in an effort to drum up publicity for a seminar or book launch, or there's some ulterior motive. But also around the world, I don't know of any country in the world that's had a 40% collapse in property prices. I know that at the time of the GFC, a few countries, I remember Ireland was one of them. The United States actually had maybe 20% drop in prices.
Yeah, Ireland, yeah.
But we've never had anywhere in the world that's had a 40 or 50% drop, not even in the wake of the Great Depression. So I honestly believe that the people who are making those forecasts are doing it to attract attention to themselves, to achieve publicity. They know that media will run with it because media likes a screaming negative headline. I'm quite sure most of them don't even believe the forecasts that they're making themselves. They do it for ulterior motives, to achieve publicity for some specific purpose. And media usually obliges without really considering the consequences of what, the stress that might cause to households for the people who believe it and take it to heart and start to panic, because that happens.
Yeah, absolutely. But that's what I'm saying. When you look at it logically, it doesn't equate. They look very silly afterwards, those people.
Yeah, but they keep doing it, and some, just recently we've seen a lot of media with forecasts from the big four banks,
Mm-hmm.
and they're forecasting that prices will fall next year, they believe. And I often point to people, look at what they forecast this time last year and this time 2 years ago.
Yeah.
They have got a terrible track record in forecasting real estate price outcomes. a lot of people think they deserve credibility because they're the big banks, so we can believe them, right? Well, actually, no, look at their track record. They have the worst forecasters in the Australian real estate market. At the start of 2020, when COVID hit, they forecast 15-20% drops in prices.
I noticed that.
Prices rose that year. The start of last year, they forecast maybe 7-8% growth in the Australian property market, and well, it rose 25%. So now they're forecasting this year we're going to get maybe 4% growth. They said Brisbane was going to rise 4%. Well, Brisbane did that in the first 2 months of the year. It's going to, even with the floods that have happened, Brisbane's going to vastly exceed that forecast.
Interesting.
So we need to be aware that the track record of these apparently credible people is terrible. And I don't know how they get away with it and how media lets them get away with making these outrageous forecasts, which are subsequently proven to be wrong time after time.
Yeah, that's interesting. It happens time and time again, right? And as we're seeing, we're getting conflicting reports. I'm getting these this is just one lot. I'm getting these every day.
Yeah.
I refuse to open because it's just, I don't waste my time reading it. So what would your advice be to those that have been caught? They're caught on the media cycle. You've got, one frame of mind. Naturally, sellers are going to be looking at markets booming. Buyers are going to be looking at markets, it's set to drop. They're sitting on the fence, don't want to do anything. Sellers are sitting there going, I'm going to wait till it picks up some more. What would your advice be to those consumers?
Look, if you're a seller, you're ready to sell, I think you should sell. I mean, the markets are still good and there's no reason not to proceed. But I think the best advice is just tune out what I call the white noise in media.
Where to look for information.
There's nothing in that that's going to help you. The best evidence is the anecdotal evidence. The best thing they can do is talk to people at the coalface of the industry, talk to people like yourself, talk to valuers, talk to buyers agents, people on the ground who know what's happening day to day at the industry. It's not that hard to find people who, they're outside the media cycle. They're people at the coalface of the industry every day. They know what's going on day to day. And they can tell you what they're feeling and they're seeing. They know what sold yesterday. They know what sold last week and for what price. And they can give the average consumer information that is quite divorced from the rubbish that's in mainstream media.
Yeah, no, that's very good advice. Thanks for that, Terry. But I think it's interesting. Now, going back just to the war, the Russia-Ukraine, do you think we'll hit some form of inflation as a result? Do you think banks will sort of tighten their lending policies and restrictions as a result to, I guess, a bit of a buffer to protect a recession or anything of the sort from happening?
Well, I don't think that's not really the bank's role to do that. Maybe it's the Reserve Bank's role to pull some levers to keep inflation in check. So it comes down to what they might do with interest rates. And again, we've got daily media speculation about that. And a lot of it's pretty misinformed. And it occurs to me sometimes that the vast majority of what's in media these days isn't what's actually happened. It's speculation about what might happen. And that's certainly the case with interest rates. And I'm personally not interested. I mean, tell me when something changes. What I'm interested in is what the Reserve Bank governor says and what he does. All the media speculation is irrelevant to me. The Reserve Bank governor has said repeatedly, he's almost every week, he reiterates that they're in no hurry to lift the official interest rate. He says that it is possible and plausible there may be a rise in the official interest rate sometime this year, but they're going to wait and see what happens with inflation and with wages growth and other factors. Their job is not to control the property market. It isn't their job to keep a dampener on property price rises. Their job is in other areas like to keep a lid on inflation, and that may be the thing that triggers them eventually, because one of the consequences of the war in Ukraine is shortages of petrol, and we've already got petrol prices rising. That's going to feed into inflation. So that may eventually have an impact that to keep a lid on inflation, the Reserve Bank will lift the official interest rate. But I don't think that event is going to have any major consequences for real estate. So what we've seen in the past is that an interest rate rise doesn't dent a property boom. 5, 6, 7 rapid fire interest rate rises may slow it down, but one certainly doesn't, 1 or 2 don't. So again, the media speculation that interest rates will rise and prices will fall, that's never happened in the history of Australian real estate ever. And I don't think it's going to happen this time either.
Yeah, and just on that, if I recall correctly on the dates here, I think it was the May 2017 federal budget announcement where we still had interest rates of record lows of 1.5%. Yet the property market across the net, well, when I say across the nation, here in Sydney in particular, had cooled and had dropped. And in particular, Cherrybrook had corrected about 6.6% in 2 years, keeping in mind we had 45% price growth the 3 to 4 years before that, right? So the point I'm illustrating here is even at your so-called record low interest rates, there were obviously macroeconomic policies in place that were designed to cool or just stabilize the property market here, right? So
yeah, there were decisions by APRA, for example, that
yes,
to sort of make sure that the lending that was happening wasn't risky lending, and impose restrictions on lending for real estate purposes. I personally think they should just stay out of the real estate market and let market forces take care of it. When they interfere,
yes,
they create distortions. And what we currently have, the biggest issue in Australian real estate right now is the shortage of rental properties. That's a crisis across the country.
yeah.
The latest interest rate data was out this week, and it shows that in 6 of the 8 capital cities, vacancy rates are below 1%. And in Sydney, they're around 2%, and Melbourne's slightly higher. So, and then across regional Australia, pretty much everywhere is below 1%. So we've got this rental shortage crisis, and it's actually come about over a series of decisions by federal government, state governments, APRA, rhetoric by federal Labor at the last 2 elections about negative gearing. All of that has discouraged property investors. And over time, property investors have sort of sat on the sidelines. Their market share at the moment is much less than historical averages. And that's led to a shortage of rental properties through the interference and bad decision-making of various spheres of government. And that's a real problem at the moment. And what it does mean, though, is it's a great time to be a landlord in Australia. It's a great time to be an investor owner of real estate, because in most parts of Australia, there's a shortage. And if you buy a property and make it available for rental, you're going to have 20 or 25 people queuing up at your open house, and probably somebody offering more than the asking rent to beat the competition. And so we've got rents rising almost as strongly as prices have been lately at the moment. So
we're seeing that, yeah. We're seeing it firsthand.
Yeah.
And there was one other question I had that slipped my mind. God, it always happens. It came to me as we were chatting. It was something you said that triggered. I should have jotted this down, but anyway, while that comes to me. So just to summarize, don't get caught up in the month-to-month statistics. Just look at it over the long haul. Obviously supply and demand will play a big part. So as far as property market's concerned, you're still forecasting, a degree of growth for this year.
Yeah, I think we're going to see some very good growth in 2022. What I do believe is the market's going to be a bit more segmented than they were last year. Last year, it felt like just anywhere in Australia was growth, and some investors were throwing money at, they're buying property almost anywhere.
Yeah.
And I think that this year, property buyers need to be more selective, because we're going to have some markets showing very, very good growth, but others not so good. There are some markets that have been on a growth cycle much longer than, we've been in a national property boom for maybe 18 months, but some markets have actually been on a growth cycle for 4 or 5 years. And we're starting to see signs that those markets are starting to slow down, as you would expect, because markets can only show great growth for so long, and then they start to taper off. So we're seeing places, I'm not thinking of anywhere in Sydney with this, but certainly there are some markets like Hobart, for example, which has had 5 years of fantastic growth. It's starting to slow a bit. some regional markets. Sunshine Coast, where I'm sitting at the moment, it's 3 fantastic years of growth, and there are evidence in the sales volumes that it's starting to slow down a bit. So we're going to see instances like that, but on the other hand, we're going to see a market showing 20% plus this year.
Wow, impressive. And it came to me, you probably saw me scribing as you were talking. One of the things now, what I've been hearing a lot of is the new construction starts have slowed due to the costs of raw materials. Is that true? And if so, will that play a part in, the existing dwellings still performing quite well as a result?
Yeah. Look, I think there's a very strong argument for buying existing dwellings at the moment, and it's the reason lies in what you've just said. We have a situation at the moment where, for various reasons, we have a shortage of everything that goes into building new houses, and it's really slowing down the construction of new dwellings. It's making it more costly. The floods that have happened in some parts of Eastern Australia have worsened that situation. And the analysis coming from credible organisations is that we have a shortage, and the shortage is going to get worse because of various factors, including the delays and the shortages that are slowing down new construction. So that's another reason why I don't believe we're going to see prices stop growing anytime soon in the housing markets, because the simple supply demand equation, we have a shortage and it's going to get worse before it gets better. So that's a factor, and it's a good strong argument for buying existing dwellings, I think.
Okay. And look, I'll finish on this one. I do thank you for your time. So how do you see the Cherrybrook property market performing over the next 2 to 3 years? Do you still think it's going to be a consistent performer? I know it's been one of the regular consistent achievers in your forecast. Do you still see that being the case?
Well, I do. I mean, it's one of those markets in Sydney that has that priceless quality of consistency. It just seems to keep on performing in good times and bad. It's a really good area. It's an area with good quality dwellings. It's got quite a low level of renters in the market, which is an indicator of strength. But the thing that really stands out for me about your market is, and it's in our own report, the long-term capital growth rates are absolutely extraordinary. There would be very few precincts anywhere in Australia that has the growth record of the precinct where you're currently sitting. In the list in our report, we list Cherrybrook and Pennant Hills and Thornley and Dural, West Pennant Hills. They've all got long-term capital growth rates. So this is the 10-year average, 10, 11, 12% a year. Now, there's probably nowhere else in Australia that can match that. I consider a really good long-term growth rate to be, say, 7 or 8% a year. And if you're living in an area that's achieving that, then you're doing really well, because there's lots of parts of Australia that have only managed sort of 3, 4, 5% over that lengthy time period. But your market, it's 9, 10, 11. In some cases, I think Cherrybrook we have listed as 11% per year, and Dural is 12% per year, and that's about as good as it gets anywhere in Australia. But it does say something about the market. It's a market that just keeps on providing better than steady growth because of the quality of the location. It's got, I guess, relative affordability for what it offers in Sydney terms. It's got great infrastructure. It's close to desirable things, and there's some really big things that have happened that have helped the market, like the Northwest Metro, for example, upgrades to road links. But there's a lot more coming up. It seems that when anything happens in your area, it's usually $1 billion project. And so
they're spending big.
They're spending big on new master plan communities and new infrastructure, and that's one of the reasons why it just keeps producing this enduring track record of good growth, because it's underpinned by good existing infrastructure and spending on new things that create economic activity and employment in the area and highlight the desirability of that part of Sydney as a place to live.
Yeah. Well, Terry, I think I know you're a busy man, and I do thank you for taking time out today to speak with us and obviously answer you know, put some clarity. It's definitely helped me, as I'm sure it's going to help everybody else that's watching this. For those of you watching, make sure to visit Terry's website at hotspotting.com.au. He's got some great reports. If you're looking to invest, he's your man. But yeah, I can't thank you enough for your time today, Terry. It's been fantastic.
Yeah, it's been good talking to you too, Angelo. Always a pleasure. Let's do it again soon.
Yep, absolutely. All right. Well, you take care, and thanks again for your time.